Before we dive into the chart, let me give you a quick rundown of today's game plan. I will be using my retracement reversal strategy, focusing mainly on Euro US dollar pair. That is one of my favorite pair. I will walk you through exactly what I look for when I enter a trade, and more importantly, I want you to understand why I am taking the trade, not just see the mechanics behind. Alright, let's dive into the chart. Right now I'm watching Euro US dollar pair because I'm seeing that market is moving strongly in the downward direction. So we have a strong trend, and here is why this setup is interesting. In order to place a winning reversal trade, what you need is a strong trend and volatility in the market with some price action so that you can expect a reversal with confirmation. And I'm going to place a trade in this particular scenario only when the market will go up, hitting a resistance level somewhere around here and giving us a weakness sign that market is now weak and it is ready to continue its trend, which is downtrend in this case. And then we are going to place the trade as soon as we get the confirmation. This setup aligns with my strategy because the strategy is very simple. What we need in our strategy is first a strong trend, second a volatile market with decent price action, third a strong support and resistance level, fourth weakness in the market momentum when the market is approaching the SNR level, and lastly confirmation part, a reversal signal in the form of candlestick or chart pattern when the market is at SNR level. So we are in. Let's see what will be the result. Now it's not in my hand, but this is exactly where discipline comes into play, and even if this trade doesn't go my way, I will not place a second trade to recover the losses because revenge trading makes you lose more. Therefore, always have a plan on how much money you can afford to lose in one trading session, because if you don't have that plan, you could blow your account very fast if things goes against you. While this trade is working, let me know if you have any questions about this strategy in the comment section. I'm happy to explain further, and if you're getting value from this, make sure to apply it once on live market. Let me quickly show you another example on how this strategy has played out in the past as our trade is still running. Here it is. This was the strong downtrend. This is the first condition. The trend needs to be strong. So this is a strong trend. It's a downtrend. Second thing, we need retracement. This is the retracement phase. As we all know that market cannot go straight down. It has to run. It has to retrace. It has to run. It has to retrace. It has to run. It has to retrace. And that's how market moves. So what we do, we wait for the market to retrace back, because once the market retracement is over, it is going to continue its trend, which in this case is downtrend. So what happens here is that market goes down. It started retracing back. So when the market is retracing, we have to wait for the market to hit a SNR level. And here I can see that this was a previous level. Market tested this level here, it worked as the support, it worked here as the support, and here you can see it worked as the resistance. So this is a strong level. Happens here is market goes up and hit that level, but there is a catch. What we need is a weak market in order to capture the reversal, because if the market is strong, it can break strong levels and can go further up. In this case, what happens is that market approach this level very strongly. You can see these three bull candles, they are very strong, and we cannot expect a sudden reversal from here. So even if the market is hitting this level, there is no such way we can say that market can reverse now, because the power was very, very high here. So what we need is a weak market. In this case, the weakness was not there, and that's why the total reversal didn't happen. You can see the market goes up again, but here you will see that market was in the downtrend. It retraces back, it hit the resistance level here, but one thing was different in this case. You can see these small candles shows weakness in the buying zone. The rejections coming from the upper end shows the strength of the seller, and that's why we can say that now the market is weak. We can expect a reversal from the resistance level. In order to do that, what we need the last confirmation, which is the rejection and a confirmation in the form of candlestick or pattern. Here you can see this is a strong confirmation by the seller that yes, we are ready to move the market in the downward direction, and you could have placed your trade here, which will be a winning trade. Similarly, in this case, we did the same thing. Market approached this level very strongly, but we didn't place the trade because we know that it's not easy to take the reversal from this point because the buyers were strong here. So what we did, we waited for the market to go up. It goes up and we got the confirmation here. And that's why we placed this trade. Let me quickly explain you one more time why I took this trade. It was a downtrend. So we have the trend. This was the retracement. This was the resistance which worked here, you can see. And we didn't place our trade here because the market was not weak. We placed our trade here because it was weak. The market was weak here. And market can only reverse when there is a weakness in the market. You cannot expect a sudden reversal all the time when the market is approaching very aggressively. So we waited for the market to get weak. Market gets weaker here. And then as soon as we get the candlestick confirmation, we place our trade. Even if the trade didn't work out, we do still be following the same trade management process to limit the downside. Remember, it's not about winning every trade. It's about managing risk and keeping your losses small. Remember, trading is a long game and consistency is key. As promised, here is a bonus tip on trade management. The less you trade, the more you make. The more you trade, the less you make. Traders who take hundreds of trades in a day often struggles to make profit, while those who focuses on just a few quality trades tends to profit the most. The reason? The human brain can only make a limited number of high quality decisions each day. If your goal is to trade successfully and make consistent profit, focus on taking fewer smarter trades. Quality over quantity always.